Hi guys, I hope you're good. Let's look at Tiger Brands, and we are on the monthly chart. And in regards to this particular chart, the first thing that I can see that is very much important is the fact that we have this W structure over here, which has a neckline at that point more or less. And just remember guys that necklines are very important, and in this particular case, this particular neckline represents a very strong level of resistance. And what may actually happen over the next couple of days is that we might potentially see price test this area and then potentially move down or push further up, right? So if the market closes above this level, we would love to see it come back to the neckline to test it, and at the neckline is where we would look for potential buying opportunities, right? And that is because, as I said, we have this information, and at that point we would have this neckline violated in terms of price closing above that area, and then, as I said, we would look for potential buying opportunities at this point, right? And our first take profit should be at least this level, and that is because it is a very strong level of resistance. And the second take profit should be around this level over here. It too is a very strong level of resistance. And if you also look on this side, we also had an opposing structure, which was an M structure, which also has a neckline at this point more or less, right? I just hope my drawings are not too confusing, but as I said, we have this M structure which has a neckline at that point, and this place or this level here is actually also a very good level to take profit, right? Anyway, let's proceed. What I'm gonna do is just add a neckline to the W structure, so just bear with me guys while I do so. Let's see. There goes our neckline more or less, and just remember that necklines are not actual lines, they are areas, right? So we could say that more or less this entire zone is the neckline of that W formation, right? So from here, what I'm going to do is head down to the weekly chart. However, before I do so, let me just also remind you that whenever it comes to W structures, what normally happens is that a lot of traders and investors buy on that second leg of the W structure, and they place their stop losses just below that structure, right? And what this means is that we would then have a lot of liquidity stuck at this level in the form of stop losses. So as much as the anticipation is for the market to break the neckline, come back to the neckline to test it, and then potentially push further up, what may actually happen is that price from where it is at this level of resistance may actually push further down to stop hunt all of those stop losses that are sitting at this point, and then we might then potentially see price revert, right? So just keep that in the back of your mind as we move along. And another reason why I say that there's plenty of scope actually for the market to move further down is because we also have this candlestick over here. It is a bearish candlestick with a small body and quite a long lower wick, and it too tells us that we have a lot of liquidity sitting at this point. And as I've said, liquidity represents money, and that money needs to be triggered by the market at one point or another, right? So from here, I'm just going to head down to the weekly chart, and here we are on the weekly chart. Let's see what do we see on the weekly chart. Let me just zoom in a bit. As I said guys, when we were looking at the monthly chart, I mentioned that this area over here is a very strong level of resistance, and it is quite possible that we might see price actually push further down, right? Because there are a lot of sellers at this point that are just waiting to pull the trigger in as far as selling goes, right? Anyway, let's proceed. So what else do we see guys in regards to the weekly chart? Let's have a look. Another thing that I see is that we have this candlestick over here. It is very much similar to that candlestick that I spoke about on the weekly chart, or rather on the monthly chart at this level, in the sense that it too is carrying a lot of liquidity here. So it means that there is plenty of scope for the market to actually push further down to this level to trigger that liquidity, right? And remember that liquidity is money that needs to be triggered by the market at one point or another, right? So what else do we see guys? Let's see. What else do we see? Let me have a look. I don't really see much at this point. So from here, what I'm gonna do is head down to the daily chart. However, before I do so, let me just point out that we might potentially have a gap at that point, and if we do, then it means that the market is likely to actually push further up to this level to trigger that gap, and then potentially push down or even further up. Why do I say this level? That is because gaps are also very much similar to liquidity candlesticks, in the sense that they too carry a lot of liquidity, and that liquidity represents money, as I've said, right? So just keep that in the back of your mind, but we will check this area out once we get to the smaller time frames, such as the daily chart and the H4, because as I've said, there might be a gap at that point, right? Anyway, from here, in fact, before I go down to the daily chart, let me just mark this level over here, because as I've said, it's a very important level because it represents liquidity. Let me just do so quickly. There we go. And then I'm gonna head down to the daily chart, and here we are on the daily chart. I'm just gonna zoom in a bit. Let's see. And the first thing that I'm going to do in regards to the daily chart is to add my daily channel. Let's have a look. Just bear with me, guys, while I add my daily channel. And I would add my daily channel more or less in this manner. And just remember that we need to ensure that our channels are as accurate as can be. Just bear with me, guys, just bear with me. There we go, more or less, right? Let's have a look. So what else do we see, guys, on the daily chart of Tiger Brands that we should be paying attention to? Another thing that I see in regards to this particular chart, which is the daily chart, is that we have a very nice W structure over here, which has a neckline at this point, right? And you guys know by now that whenever it comes to W structures or even M structures, we want to see price closing above that neckline and then coming back to the neckline to test it. And if it does so, at the neckline is where we would look for potential buying opportunities, right? So similarly, we would love to see price come back to this level to test it, and at this level we might potentially look for buying opportunities. I meant buying opportunities, not selling opportunities, buying opportunities, right? So as I've said, guys, should price come back to this point from where it is, at this point is where we would look for potential buying opportunities, right? I'm just gonna add a neckline to that W structure, so just bear with me, guys. Let's see. Okay, so there goes our neckline of the W structure. The next thing that I'm going to do is to utilize the Fibonacci retracement tool, just to see if that neckline actually aligns with any key numbers that we have on the Fibonacci retracement tool. So just bear with me. So there we go, guys. So we can see that the neckline, which is over here of this W structure, aligns with, we could say, the 61.8% Fibonacci retracement level, and that's a good level, and that adds as confluence, right? So in other words, we have two reasons why we would look for potential buying opportunities should price come to this level. Number one, we have this W structure which has a broken neckline, and number two, the neckline, which is also a very strong level of support, aligns with a key Fibonacci number. So we might look for, or rather we might actually buy at this point. However, just bear in mind that I'm not saying that we should be buying at this point. I'm saying we should look for potential buying opportunities at this point, and we would also need further reasons for why we should be buying at that point, right? Anyway, from here, what I'm gonna do is head down to the H4 chart. However, before I do so, let me just also remind you that I had mentioned that this level over here, let me just actually zoom out. Remember that this level over here, right, is a very important level, because I said it's a level of resistance, and price may actually bounce off that level and then push further down, right? And then earlier I spoke about potentially having a gap. Let me just zoom out a bit, then zoom in again. Let's see, I spoke about potentially having a gap at this point. Now that we are on the smaller time frame, I can see that there's no gap actually. It looks like the market has been filled, right? Anyway, let's proceed. So what else do we see in regards to the daily chart? Nothing. I'm just gonna move down to the H4 chart. Just bear with me, guys. And on the H4 chart, the first thing that I'm going to do is just to fix my daily channel. Just bear with me. Right, there we go. Let's just zoom in a bit. So what else do we see, guys, in regards to the H4 chart? On the H4 chart, I really don't see much. But just to recap, remember that on the daily chart we spoke about this W structure, and we said that it aligns with the 61.8% Fibonacci retracement level, and that your price from where it is retraced to this level, at this level is where we would look for potential buying opportunities, right? So that is it, guys, and as far as my analysis goes. Just to recap, let me just actually go back to the daily chart. Let's see, right? Price is at this level, which is a very strong level of resistance, and as I've said, guys, it is quite possible that the market may push further down to this level where we have the W structure, and then push further up or even push further down, because I've said to you guys that we have a lot of stop losses that are sitting here, right? Because a lot of people bought. If I can just go back to the monthly chart. On the monthly chart, I spoke about how we have this W structure over here. Let me just actually make this bigger. On the monthly chart, I spoke about how we have this W structure over here, and I said that when it comes to W structures, a lot of traders and investors buy on that second leg of that W structure. Yeah, so we have a lot of money sitting here in the form of stop losses, and it is quite possible that the market may push further down to come and grab that liquidity, and then only push further up, right? And if that does happen, it might then give us this very nice W structure, as you guys can see, right? So at this point, all I'm doing is just speculating and showing you some of the possible outcomes, and we just need to make sure that we are prepared and ready for whatever happens in as far as price action goes, right? So that is it, guys, in as far as my analysis goes. If you like the content, just remember to like it, right? And also subscribe, and peace out, guys.